It's Super Bowl week. It's been an awesome week. A lot of things going on that make it exciting. Each player took home $178,000. But how much do they actually get to keep? Hey, it's Josh with tax.pro. I'm an EA with over 20 years of experience, CEO of Nat Business Solutions. I'm glad you're here. Today we're going to talk about the Super Bowl. Awesome. Hopefully you enjoyed that queso and you're not too hungover. Maybe go ahead and take a couple of Advil. But I'm not here for medical advice. I'm here to give you some tax advice. So let's talk about winnings. On $178,000, which is what each player won last night, how much do they actually get to keep? Well, believe it or not, states play a big role in this because different states are taxed at different amounts and the players have to pay the tax in that state when they win. So California has a much higher tax rate than like Florida or Texas, who don't have state income taxes. So those California players are going to be paying somewhere between 40 to up to 50%. So of the 178, if it's 50%, then 89,000 is what they would keep. That would be the remaining amount. Ouch. So congrats to the winning team. Way to go, guys. And if you need help with your taxes, reach out to us. We would love to help you. Let's say you were a big winner with sports betting. Congratulations. That's awesome. Get this. Nearly 80% of Americans are betting on sports now. Can you believe that? It's crazy. I'm not one of those. So I'm in the 20%. I like, work too hard for my money. I like to keep it. But on that topic, you may not know this as a winner, but when you have gambling winnings, that is something you've got to report to IRS. Even if you have gambling losses, you still have to report those winnings to the IRS. In a recent survey, only 18% of respondents knew that their winnings must be reported to IRS, and just 25% correctly identified sports betting winnings as taxable income. So you're not alone in not knowing this. That's why you're here. Now you know. You need to go ahead and report all of your gamblings, winnings, and losses to the IRS. You're limited on the amount of loss you can take. So let's say you won $1,000 last night and you spent $1,200. Your losses are limited to only 90% of your winnings, meaning you could only deduct $900. 100 of that 1,000 is still taxable income to you. Congratulations on winning that bet with the Super Bowl, and now you have a better idea of what you need to do. Another important tip on gambling. If you gamble in another state and you have winnings in that state, you're going to need to report it to that state. So if you gamble in 15 states and all of those states have a state tax return, you're going to have to file a state tax return in all of those states reporting those winnings. If you get the opportunity to withhold on that, you want to withhold on those gambling winnings in whichever state you want it in.
Unlock the power of full-service payroll with Payority. What is full-service payroll? It's the ultimate hassle-free solution for managing your business's payroll needs. With full-service payroll, every aspect of payroll processing is handled for you, from calculating wages and taxes to filing compliance reports and ensuring timely payments. You get peace of mind while saving time and resources. Why Payority's full-service payroll stands out. Complete payroll management. We handle everything: wage calculations, tax withholdings, direct deposits, and more. Compliance made easy. Stay worry-free with expert handling of federal, state, and local tax regulations. Employee self-service. Empower your team with easy access to pay stubs and tax forms through our secure portal. Dedicated support. Our payroll experts are with you every step of the way, ensuring accuracy and reliability. Ready to simplify your payroll? Visit Payority.com to learn how our full-service payroll solutions can transform
let's talk about
your
your
business.
Super Bowl party. You had a Super Bowl party and you're wondering if it's tax deductible. I'm just going to say for 99.9% of America, the answer is no. It is not tax deductible. If you're curious what could make it tax deductible, it would need to be tied to a team building event. And even at that, there's going to be aspects and elements that are probably not going to be deductible in that party. We can't just go out and throw a luxury party just for fun and deduct the taxes. Let's talk about those expensive Super Bowl ads. Some of you weren't even watching the game. That wasn't the point. What you're actually doing is just watching the ads. And the question that we get sometimes is, are those Super Bowl ads tax deductible? Because they're super expensive. And the answer is yes, they are. As long as that business is in business, then yes, those Super Bowl ads are tax deductible. There's obviously some exceptions. Maybe if it's a nonprofit, then they don't need the tax write-off. Another thing would be if it's a startup company and maybe they haven't made any money yet, they're just expensing it in the form of startup. If that's the case, then they're not deductible today. It's something they're going to have to deduct over time. But for most businesses, and especially all of the ones that have been doing this for many years, those ads are tax deductible. And yes, they're going to take that deduction on their 2026 taxes. Hey, thanks so much for tuning in for our Super Bowl FAQs. We're glad you're here. Listen, because of freezing ice in Iceland, you should definitely like and subscribe to this content so it shows up in your feed. Thanks.